If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.
Ladies and gentlemen, good day and welcome to the Q2 FY26 earnings conference call hosted by Filatex India Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Bhavin Deria from Share India Securities. Thank you and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Share India Securities, I would like to welcome all participants for Q2 FY26 earnings conference call of Filatex India Limited. We are pleased to have with us management team represented by Mr. Madhusudan Bagaria, Chairman and MD, Mr. Ashok Chauhan, Chief Visionary Officer, Mr. Nitin Agarwal, Chief Financial Officer, and Mr. Vedansh Bagaria, Vice President, Corporate Strategy. We will have opening remarks from Mr. Madhusudan Bagaria to give an overview of the company's performance. This will be followed by Q&A. Thank you and over to you, Madhuji.
Thank you. Good day, everyone, and a warm welcome to all attendees joining us for the second quarter FY26 conference call. Joining me today are Mr. Ashok Chauhan, Nitin Agarwal, and Vedansh Bagaria. I trust you have had a chance to go through our investor presentation, which has been uploaded on both our website and the stock exchanges. Let me now take you through the highlights of our performance this quarter and share some perspective on the broader journey through the first half of the financial year. Q2 FY26 was an important quarter for us. The company continued to make steady progress across all key parameters, reflecting both operational consistency and a clear focus on improving profitability. On a Q-to-Q basis, revenue growth on Q-on-Q basis, revenue grew to 1076 crores from 1049 crores. 63 metric tons to 101.391 metric tons, indicating healthy demand and improved capacity utilization. Our EBITDA rose by 14.36%, reaching 88.93 crores compared to 77.76 crores in the previous quarter. PAT followed a similar trend, increased by 16.8% to 47.58 crores, up from 40.74 crores in Q1. This consistent quarter-on-quarter progress underscores the benefit of our ongoing focus on efficiency, cost discipline, and better product mix management. Looking back at the first half of the year, we are pleased with the steady improvement across all key metrics. Revenue for H1 25-26 stood at 2,125 crores compared to 2,103 crores in H1 24-25, marking a stable performance despite a challenging external environment. Sales quantity increased to 198,654 metric tons, up from 192,218 metric tons in the same period last year, driven by consistent demand and smoother plant operations. What is truly encouraging is the improvement in profitability. EBITDA for the first half rose sharply to 166.7 crores from 106.6 crores, while PAT nearly doubled to 88.32 crores compared to 45.77 crores in the corresponding half of 24-25. This reflects our strong operating leverage and the result of several internal initiatives, from process optimization to better energy management and tighter working capital control. In short, the first half of FY26 demonstrates that the actions we took last year are now delivering visible results. Domestically, we continued to perform well despite global uncertainties and raw material price volatility. Demand for polyester yarn remained stable, with encouraging signs of recovery visible in the downstream textile value chain. That said, there are some policy level changes which we are watching closely. The proposed anti-dumping on MEG, a key feedstock, could increase production costs across the polyester ecosystem. Nevertheless, our strong Q2 performance demonstrated that we are well positioned to navigate such headwinds through operational excellence and prudent cost management. As we had shared earlier, we have embarked on a total investment plan of around 650 crores, covering capacity expansion, sustainability, and energy efficiency. Additional yarn capacity project 235 crores, progressing well with major machinery orders placed, completion as per target by September 2026. Recycling project, civil construction is underway and major equipment orders have been placed. Production is scheduled to begin by September 2026. Steam infrastructure project for 85 crores already in the implementation phase, turbine orders placed and pipeline work is progressing well. Completion is expected by June 2026. Renewable energy initiative being implemented under MOU with Torrent Power. It is currently awaiting statutory approvals. As a part of routine efficiency improvement, we had initiated automation in rather labor-intensive post-winding operations, including doffing and packing of FDY and POY lines, with an investment of 40 crores. The infrastructure is ready and shipments of equipment will begin from end of this month. Except for minor regulatory delays in renewable approvals, all projects are progressing as planned, reinforcing our commitment to sustainability, efficiency, and scale. We remain optimistic about the medium-term outlook for the polyester industry and availability of key input materials. The upcoming PTA capacity additions, 1.2 million metric tons of GAIL, likely to start by February 2026, and 1.2 million metric tons of IOCL to start by September 2026, and 3.2 million tons by Reliance Industries, likely to start by early 2028. All these are expected to significantly reduce India's dependence on imports, lower freight costs, and improve supply chain stability. As these capacities come on stream, raw material availability should improve, pricing expected to become more balanced, and volatility in input cost will moderate. Combined with an anticipated recovery in domestic textile demand and more positive global trade sentiments, we believe these developments will create a structurally stronger environment for the entire polyester value chain. To sum up, Q2 FY26 and the first half of the year reflect steady growth, improving margins, and growing operational strength. Our strategy of disciplined expansion, sustainability focus, and cost optimization is now translating into clear financial outcomes. We have always believed in robust growth of polyester yarns in global fiber consumption, and we continue to move forward with confidence, building efficiency, investing in the right areas, and creating long-term value for all our stakeholders. Thank you. Hello.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Surya Narayan Nayak from Sunidhi Securities and Finance Limited. Please go ahead.
May I audible?
Yes, sir. Mr. Surya Narayan, please go ahead. Mr. Surya Narayan, you're
Hello?
not up. Yes, sir.
Am I audible?
Yes, sir, you're audible now.
Yes,
Okay.
you are audible.
Thank you. Thank you. Thank you, sir, for giving me opportunity. So just a couple of questions, just to understand that the average selling price is remaining in the range of 106 to 109 for last year and current to date, but down slightly to around 1 to 2%. So just to understand whether the gains on the GP side, gross margin side, is due to the lower relief from the PTR MEG side, or what actually? That is first question. And regarding the packing lines, where I just couldn't understand where we are, because it was scheduled to be operational from the June 26. So has it got postponed?
See, regarding the pricing, there is a slight fall in the finished goods pricing, but the raw material has fallen much more than that. So that's why the margins have improved. And as per the packing lines, no, the delivery is starting from end of this month, and the shipment time is 45 days as it's coming from Europe, and this is the first lot of shipment. It will keep on coming. The final commissioning will happen by June 2026 only.
So whatever the plans, be it the packing lines or let's say RE power and
all on course. Only the RE power might get little delayed because the company with whom we had the tie-up, they are facing some issues from the government getting the connectivity and all those things. We are exploring from others also if we can get power from some other sources.
So that will be postponed to second quarter, sir?
So that would get postponed to maybe something like July, August 2026. So
second quarter, sir, right? Right?
Yeah. Second quarter of FY26.
Okay. And regarding, sir, your recycling foray, so just to understand that you have recently tied up with two companies for the supply chain, waste supply chain, tie-up.
We are in advanced talk with some other brands also. Okay. So I feel that we should be able to have some more tie-ups in the next by end of this quarter.
So the current tie-up is sufficient to get the requisite raw material, waste raw material for the unit, or we are still negotiating it for?
It's a two-way tie-up. They will also supply raw material and also buy the finished goods.
Correct. No, I'm talking of the input side.
It is not for the full volume.
Okay. So when are we expecting the full volume tie-up will be for input tie-ups will be in place?
The input tie-up is already there with the local suppliers. Okay. There are local suppliers around the plant, which is in Surat area. There are a lot of consolidators who buy pre-consumer waste, and that is ample available. This supplier is for the post consumer. They buy fabrics, torn fabrics, and that they will supply to us.
So that is the fabric which you have currently dealt with is post-consumer, not the pre-consumer, right?
No, we can deal with both of them. On the post-consumer, the sorting is a big issue because we need to know what is there in the fabric.
Correct.
Pre-consumer, it is easily known what is there in the fabric. Post-consumer, you have to check it, whether how much polyester is there, how much nylon is there, how much cotton is there, woolen is there. So that's the challenge there. So that challenge, these guys are sorting it out and giving it, so we have had a tie-up with them, and they cannot give the full volume, but they might be able to give us around 10-15% of our requirement. And we are talking to other suppliers also similar. So as and when we have a tie-up, we'll announce that.
So before the commissioning, maybe by June, July, we should be in place to
It's not going to stop because we have tie-up of pre-consumer suppliers already. So it's not necessary that we go for 100% post-consumer.
No, I'm talking of pre-consumer because pre-consumer will be easy because
pre-consumer we have the full volumes available. That's not an issue.
Okay. And sir, is there any chance that we would be thinking of setting up more units after the testing success, maybe in the second quarter of third quarter of the next year? So,
based on the performance of this plant, we will definitely be going for multiple plants or a bigger plant. That will decide after this production comes in. Definitely, we will putting up more plants. This is just a starting plant only.
So far as the virgin fiber is concerned, after this 12% expansion of the capacity, we'll make a full stop with sweetening of the production facility with more productivity programs, right?
I will not call it a full stop, but there will be no major expansion. There can always be 2%, 4% expansions.
Oh, that's okay, sir. Okay.
There will not be any major expansion in the virgin.
Okay.
Main focus would be only recycle after this.
And the balance sheet side, some repayment has also happened. So, is there any chance of influx of more any dates in the second half? Because we will be paying the amount to the vendors. So this year, any influx of the date likely in the second half?
In Filatex, there will be no influx of the second half. In Texfil, definitely can be some loans which will take, because we have already tied up with the banks in Texfil for the loans, and maybe in the second half we will have some disbursement.
But sir, the cash flow from operations in the first half itself is very robust. So do we require?
We wait and watch. If we require, then only we'll take it. Now, till now we have not taken up. So I cannot say that we'll not take it. As and required, we'll take it. If not required, we'll not take it.
Okay. And sir, with the Gales facility coming in, or let's say later IOC, what kind of margin expansion we can perceive incrementally?
See, if both of them come in, I think we should have a margin expansion from the raw material at least of around 2%.
2%. And with the addition of the productivity programs that is currently underway, which will be commissioned in the second half, or let's say maybe second or close to second half. So that will be further adding how much percentage overall EBITDA?
See, the volume expansion will not add as a percentage. It will add as a number, definitely.
Yeah, volume percentage only 12%, I agree, but no productivity programs, I'm saying. I mean, the steam and others, steam, RE power and others.
Steam is likely to add around 60 crores of EBITDA in the full year of operation. Okay. And the new capacity addition, which we are doing of 235 crores, should give around 70-75 crores of EBITDA in the full year of operation. And
in the recycling fibers, you have earlier advised or let's say guided that around EBITDA percent is 35% as against the virgin fibers EBITDA of 9% currently ruling. So nearly about four times jump. So are we?
We are confident we should do a EBITDA of around 80-85 crores in the virgin fiber business.
So currently, I mean, that kind of, so just to just to understand from you that because what sort of compulsion that is there with the brands to buy the recycled fiber at such a high price when the virgin price is quite low. What is the requirement? I mean, that is what I just commercially just want to understand from you.
The European Union has made it some compulsions for them to use recycled fiber, and lot of these brands have their EPR commitments so they have to become 100% recycled by 2030 or 2031. So that is why they are all going for it, and they have been told to use textile to textile, not bottle to textile, because that doesn't become the sustainability for them. No. So the circular economy is only complete if they are doing textile to textile.
Correct.
So right currently they are using bottle to yarn kind of recycling.
Yeah. So, sir, currently who else are the global players who have been successful? Because we have done some research to understand the kind of the competitive.
Few global players, but they all are in the very initial stage like us, or maybe their all plants are expected to come by 27 or 28. No plant is coming by 26 as per my knowledge. Okay. So all are in a similar kind of a stage, putting up plants or talking to people and doing the tie-ups.
So you are saying that the such kind of facilities across the globe are waiting to be scaled up. Maybe that is in the primitive stage, and that will be once the success will be there, then definitely that can be easily scaled up. So that is the idea.
Yeah. So all are in the initial stages and putting up plants of different capacities. But I don't, as per my knowledge, nobody will be commissioning plant by end of 2026.
Okay. Thank you, sir. Thank you.
Plants which will be commissioning in 27 or 28.
Thank you, sir. I will comment later. Yeah.
Thank you very much. Participants who wish to ask a question may press star and 1 at this time. The next question is from the line of Bhavin Dedia from Share India Securities. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir, you're audible.
So my first question was how big is the first mover advantage which you can gain since your plant will be operational in FY26 as compared to 27 and 28 for other players?
Sorry, I mean if you can slow down. Not your echo is there. I think you are on a speakerphone or not.
Can you hear me now, sir?
No, there's a lot of echo.
Okay, I'll fall back in queue, sir. I'll fall back in queue.
What's the first mover?
Okay, so the next question is from the line of Varun from an individual investor. Please go ahead.
Thank you, sir. Thank you for giving me the opportunity to ask question, and congratulations on good set of numbers. I just wanted to understand how has been the raw material price movement for Q2 and also the first month of Q3. Has there been any increase? If you can just throw some light on that. And also, there is one thing that is eating up the profitability of the company, that is the exchange fluctuation. How does the company plan to mitigate that or hedge that?
So the raw material side, this quarter is quite stable, and maybe it will go up slightly. Last quarter also, it was quite stable. I mean, it was not a downward trend compared to Q1. The prices were very stable, or they inched up by 1%, something like that. So I don't see much of volatility in the raw materials going forward. But some volatility will always remain. 1 or 2% volatility will always remain until unless there is a drastic change in the crude prices.
Okay, sir. So for Q3 also, do you expect them to remain in the same level?
Sorry, can you repeat?
For quarter 3 also, do you expect them to remain in the same level, the raw material prices?
Yeah, it will be at a similar level. It can slightly edge up 1 or 2%, nothing more.
Okay.
So it will remain at the similar levels. Nothing major is happening right now.
Okay. So just wanted to understand one. I mean, the exchange fluctuation, sir.
See, we had hedged only a portion of our outstanding, which we were supposed to pay in this year. We had hedged it, but the rest of it we didn't hedge it, and because of that, the loss is there. That's a notional loss. That's not an actual outgo. And maybe once the things cool down, we expect it to come back to maybe around 100 or something. Because the hedging cost is also pretty high. If you hedge it regularly, we would have been still at a higher level than what we are at today.
Okay, sir. So do you expect it to come at that 100 level that was facing it for FY2027 or this quarter?
It depends. See, we have a consultant who guides us. We are not expert in this. So based on his guidance, we take the call.
Okay, sir. So just wanted to understand this capex of 650 crores that the company is doing. How much it would be funded through debt and how much would it be funded through internal accruals, and how will this impact your finance cost going ahead? If you can throw some light on that.
Yeah, see, so we would be taking around 200 crores of debt for the recycle project. That's the outer side. Maybe we might not take if we have internal accruals better. We can reduce that. For the 235 crores of the yarn expansion, we have already tied up for the machinery finance. So there the loan amount would be around 125 or 130 crores. These are the two loans which we'll be taking up. Rest will be through internal accruals only. And that 200 can go down if the internal accruals are healthy. We might reduce that.
Okay. Thank you, sir. Thank you for the answer.
Thank you very much. The next question is from the line of Niraj Mansinka from White Pine Management Private Limited. Please go ahead.
Yeah, thank you for the opportunity and congrats for the good numbers. Few questions. One, what you said about the anti-dumping on MEG. Can you elaborate on that?
So there is an anti-dumping which has been recommended by DGTR. Although you might have seen there a lot of advertisements in the paper by the MEG producer and from our association also regarding that the government should not put it because finance ministry has the discretion whether to put it or not put it. That's one thing. But even if it is put, then also see there is a lot of material available from USA. USA doesn't have anti-dumping. And since this raw material is in short supply, I think in all prudence, I don't think the government will put it. And there is no planning of any new plant capacity of MEG coming in India in next 3 to 5 years. Because this is a commodity which is overall worldwide surplus. So hence the margins are little under pressure, and based on that they have found the dumping. Although dumping is not there, it is just the profitability is bad. It's not dumping because these producers who are giving to India are not giving at a lesser price than what they are selling to the other parts of the world or locally. Even if it comes, I think there are certain ways to mitigate that to a major extent because like I said, USA is lots surplus MEG now, which they have been supplying to China. And recently we have also bought 1 or 2 parcels from USA. Okay. So, which are available at a better price than what is current prices in India.
Okay. The second question is on the polyester recycling. In the past you had said that the recycling realization is 45 rupees higher. So what would it imply right now? What is it right now? Recycling prices over the...
Still in that range, 45-50, depending on that. It's still in that range.
But then your EBITDA, and you said you will do 85 crores, 85 crores EBITDA.
That's on the yarn side. See, we are making only the chips. So we'll not be enjoying the 100% 40-45 rupees. We'll have to pass it some to the yarn guy also. No? So our margins would be little bit like maybe 30-35 rupees a kg. That's why I said we should do around 80-85 crores. Like our capacity is 27,000 tons. So if you multiply that by 35, what you get around that number, 30 to 35.
Okay, I got it. But do you not have plans to make yarns from that, the forward integration?
Yarn already we have our own facility there we can make and give it. But in future we don't want to go and make yarn for that. No, that is the very normal thing to do. Our specialty is in converting waste to chips. After that, it's a normal process. So going forward, we would like to put more plants of waste to chips rather than making yarn. We can always supply yarn and let people know that this can be done and this is the quality what you can get.
Got it. So, what is the possibility of it being delayed or it being earlier, the entire capex for the polyester?
I don't see more than 1 month or 2 months here and there max.
Okay. And have you do you have enough raw material availability to scale up the production within the 3 or 4 months of the commercial production start?
For the recycle?
Yes.
Yeah, recycle availability for this plant is no question, no problem. Okay. We'll have enough raw material available to scale it up to full. Also, we have an inbuilt capacity to go 20% higher. If everything falls well in line, maybe the plant can run up to 20% higher capacity.
Okay, got it. So, please correct me if I'm wrong. What you're saying is, in EBITDA terms, that current run rate of EBITDA is 330 range. I'm just multiplying current EBITDA into 4.
Right.
You have a steam coming up of 60 crores additional. You have a new capacity adding 75. Recycled 85. So you can almost go to 500 to 550 crores. 550 crores is what you can go.
Even this run rate of 330 should improve if things are like this. Going forward, I think the 330 should become around a 400 run rate.
Yeah. So you are heading towards. You said 2% because of PT also.
Yeah, that also will make a difference. No?
Yeah. So basically you are heading towards the 600 crores.
Also the demand is improving. That can also add a 1 or 2%. So there are a lot of factors. There could be some surprises also. But overall, I feel we should be able to do better than what we are doing today for the running capacities. And then all these extras will add to the margins.
Okay, got it. And last question was on the material handling and other automation. Can you just share some qualitative thought on that, what you're doing and how it...
These days, get manpower is getting a problem, and a lot of plants have new plants which are there. They have already done automation. So we thought it's an opportunity. We have the requisite cash flow to do it. So we have invested in this. What is that? The robotically bobbins are taken out, and then there is no human touch, and they get packed. So FDY more or less 100% will be done like that. So their downgradation and other things will go down because there will be no human touch in that till the entire thing is packed in the boxes or pallets.
Okay.
In POI also it will be doffed automatically, and some of it will get packed. Some which we use internally will definitely get transferred to the textilizing. So that's what we have done. This will reduce our dependence on the manpower by almost 160 to 180 people we will be able to reduce by putting this.
Okay. 160. Okay, got it. On a total employee base of how much?
No, total employee base, including all staff, and is quite high. We have around 2,500 people on roll.
No, that's also meaningful. That's a good...
Yeah, I mean, whatever we could get, to get the workers today is also getting a challenge day by day.
Right. Okay, great. Thank you very much. Yeah. I come back to the...
Thank you very much. The next question is from the line of Rahil from Sapphire Capital. Please go ahead.
Yeah, hi sir. Am I audible?
Yes.
Yeah, so any sort of outlook or guidance you can share when it comes to volumes or revenue?
Sorry, can you speak a little louder? Not able to hear.
How about now? Better?
Yeah.
Yeah. I was just asking if you can share any sort of outlook or guidance when it comes to your... So EBITDA you've covered pretty much, but when it comes to volumes or revenue front, for the foreseeable future, which is H2, and then in the next year when all the capacity is up and running as well, So if you can provide a certain direction where we head in terms of growth.
Volume-wise, I don't think much will change in H2, second half or H1 of the next year, because we are not adding more capacities and the utilization is pretty much almost full. So there will not be any much addition in the volume side till H2 of next financial year. And of course, definitely margins, I have already said we should improve. Top line, bottom line in our case will not change much drastically because it depends on the raw material prices a little bit. So there could be 2-3% up and down, that's all. It's more or less stable. The margin will improve going forward, as I have indicated.
So is it fair to say in the H2 of next financial year, things can take a turn when it also comes to top line?
Top line would be very similar. It can go up by 2-3% or remains at these levels. There will not be much change in H2 of top line. The margins, I feel,
not this H2, even next year H2, top line cannot be...
H2, definitely it will go up by at least 10-12% of what it would have been. It will go up by the capacity which we are putting for sure.
Yeah, that's what I wanted to know. Okay,
Yes.
sir. Got it. Thank you so much. All the best.
Thank you very much. The next question is from the line of Surya Narayan Nayak from Sunidhi Securities and Finance Limited. Please go ahead.
Yes, sir. So the recent GST reforms that has been made, so with that, man-made fibers, the old rate was 18% down to 5%, and yarn 12 to 5%. So how do you see structurally it is changing the industry going forward? That is one question. And second thing is that I'll come to the second question. So this is the first question. Please answer.
See, GST reform from 12 to 5% is for the yarns only. But as far as the consumer is concerned, they were always getting fabric at 5%, garments at 5%. Only change which for the consumer, right, the last consumer is that garments above 1,250 rupees were charged 12%. Now that has been changed to 2,500 rupees to 18%. So that's the only change which has happened. That I don't think will make too much of difference in the demand and supply. Because at the previous level, if the inversion is now with us only, the inversion has been removed from the garment and the fabric guy. So our inversion has increased, and that we are representing the government to even reduce that. So maybe it can increase little bit of demand. Also, the manufacturing activity in the fabric can increase because now they can put up new capacity and they can claim GST of the capital goods also and adjust that in their value addition. So that is the only benefit the fabric and the garment producers will get.
Okay. And so the second question is that we are having very good relationship with our suppliers. We are getting good rates, so and they are stalwarts. So in the industry, so it is quite difficult to digest. But going forward, as we progress, the PTA facilities of IOC, GAIL and IOC will be coming up. So do you think that maybe overseas reliance on the PTA and the MEG side will come down, and that will reduce the exchange volatility, and in our case the line item that is constantly quite a disturbing element, that will go down?
Yes, it will go down because PTA, after these two plants are there, imports will virtually be very, very negligible. MEG imports will always be there because there is no new facility of MEG coming up. As and whatever capacity increase happens in India of polyester, MEG imports will increase. So MEG side, we don't see any relief coming in next 3-4 years because there is no plant to put MEG. But PTA, which is a major raw material, yes, definitely after these two plants, the imports will drop drastically.
And so for the new loans that you have spoken about, that is for recycling around 200 crores if need occurs, and for the expansions 125 to 130 crores there if need occurs. So are we going to...
We are taking for sure. That is for the equipment which we are buying from Germany. It's ECB that we are taking. That 200 we will reduce looking at the cash flows.
But sir, don't you think, is it the mandatory thing that we should have taken ECB instead of rupee debt?
It is not mandatory, but it is prudent to take that because I don't think we can fund the whole 650 crores through our internal accruals.
No, my point is that when the rate, interest rate is going down on Indian side, so rupee debt would have made more sense.
These are not fixed interest rates. These are rates which get adjusted every 6 months in ECBs. So every 6 months, whatever is the current rate, over and above that, you pay a certain premium. That's how it happens. So it's not that you have locked the interest rate for the entire duration.
So so you think the ECB will still be cheaper than the INR rate?
Yeah, it is cheaper. If I hedge it, it is still cheaper than 0.5% to 1% than the local rates.
Okay. Okay, sir. There's some things.
Thank you very much. The next question is from the line of Bhavin Dedia from Share India Securities. Please go ahead.
Yeah, sir. Hi. Am I audible now?
Yes.
So, sir, just wanted a outlook. Like in the previous call, you had mentioned that there was domestic demand weakness, and so how is domestic demand panning out currently? And I am aware that H2 margins were better. So since in H1 we have already achieved 7% EBITDA margin, approximately what can be your guidance for H2 FY26 being the winter season coming ahead?
The H1, according to me, the EBITDA margins for the H1 is 7.84%. And I think we should do at least 8.5 to 9% in the H2.
So full year will come around 8.1%?
Yeah, full year should be above 8 for sure.
And sir, how is the demand scenario in the domestic market?
Demand is quite good. Quite good. Yeah. It's a balance. There's no problem in selling the goods. Until unless the government comes up with some different things. Otherwise, the market looks good and I don't see anything going wrong. And in this season, the demand is little high in the winter season.
Yes. And sir, any update on that minimum import price by the government for our HSN codes? Like you mentioned that there was...
No. Right now, it's still in the progress. Nothing has come out as yet. We are working on it to get these done. Even for DTY, we are trying if the government can put some minimum import price.
No update as yet?
No. Nothing concrete has happened. Still in the pipeline.
Okay. That's it, sir, from my side.
Thank you very much. The next question is from the line of Neeraj Mansinka from White Pine Management Private Limited. Please go ahead.
Yeah, thank you. I just wanted to know one more thing. There was proposal by the government they had imposed, I think, BIS norms or some norms for import of the fabric. Various HSN codes were there, and later on the import started happening from other HSN codes. So what is the status right now in terms of the import of the fabric from outside China?
It's still happening from certain HSN codes, and it's quite a decent volume. We are trying to get MIP done on those HSN codes also. If that happens, that will give really good boost to the Indian market.
Okay. And do you see, okay, I know it's difficult to predict, do you see that this is the last one, or they can find more areas of imports?
I don't know. We have tried to given them a list of almost all the HSN code. Rather, we have shortened it. We have said you put it on the 4-digit rather than going on 8-digit. If you put on 4-digit, then almost everything is taken care of.
That makes sense. Yeah. Okay, got it. Yeah, and color on the consumption growth in the Indian market. Any color on that?
Consumption is happening downstream. Lot of machines are getting put. All these weaving and knitting. Lot of machines are coming. So we see a very good future going ahead because downstream is really booming. Because there was a rumor that there will be a BIS on the machinery, so people have preponed to put all the weaving and knitting machines. So there is a huge quantity of those machines coming in.
Okay. So you are saying that because they have put the weaving machines, they will be bound to utilize at least that much.
Demand should increase, no?
Okay. But the consumption at the final leg of the customer should also increase, not to justify that.
Yeah, that too with the GDP rise and other factors, it will increase. With this government giving incentive, reducing income tax to 12 lakhs, all those things will put more money in the hands of the people, and normally first thing people do is buy clothes if they have more money.
Okay, great. Thank you. Thank you very much. I got it.
The line for Mr. Tushar is disconnected. The next question is from the line of Surya Narayan Nair from Sunidhi Securities and Finance Limited. Please go ahead.
Yeah, sir. Again, one question is that, so with the influx of the capacities from the GAIL and IOC, so I believe there is currently some gap between the Chinese production prices and the Indian production side. So, which is actually creating some sort of level playing field. So, do you think that that level playing field will be? The gap in level playing field will be reached post operations of the GAIL and IOC?
See, right now, because of BIS, Chinese products which we import for re-export are definitely cheaper than what we import from other countries who have a BIS. So that gap should almost go away once these two players come in and start production, because the imports will reduce drastically. So either these people who have a BIS, they'll reduce the prices, or the local producer will have to match the Chinese prices. So I don't say 100%, but yes, to a major extent, that gap should go away. Today, that gap is around $35 per ton in PTA. Chinese are $35 per ton cheaper than the BIS and the local producers. So that's why I said our margins could improve by around 2%, which is around 2 rupees. We should get extra margin because of PTA becoming cheaper in India compared to what it is today.
If you can give on the price, INR conversion price, what would be the Chinese price and what is the Indian price at the moment, sir, for PTA only?
Right now, not calculated. Dollars, I know. You can put the dollar rate and calculate. So dollar rate price of China is around 640 as compared to 675 of the BIS price, BIS countries like Taiwan, Korea, Thailand, Indonesia. So that's kind of these are landed India prices in dollars, and then you have to pay 5.5% duty on that.
Okay.
And then clearing charges.
So we could be, maybe you are expecting that this $30 to $35 gap may be reduced, and that is the benefit where
that will get reduced, and because of that, even the freights will get come down. The freight which you have to pay on this will come down because there will not be demand. That also gets reflected in the Indian prices somehow. So I think we should get a benefit of around $35 compared to today's scenario as what the Chinese get. So that should increase our margins by around 2 rupees.
So if you will be competitive later, maybe in the 2027, 28 scenario with China, so will it not open gates for export to European countries or let's say cold countries where the man-made fibers are more actually adopted?
Yeah, if we are more competitive, yes, exports can go up. For sure. But for export today also we can get from China, no? So that will not make too much of a difference. It is the Chinese who are selling at very low prices that we are afraid of. And the freight component extra what we pay will always remain, no? Today the local Chinese, let's say, gets the goods at around $600. We have to pay around $675 or $680 in India. So that is the gap. That will come down by $30, $35. But still they will be cheaper by us. So to compete with them, I don't know. If the margin goes up, we'll become more competitive, but it will not, the export will not increase substantially, but they will increase for sure.
Okay. That's all. Thank you.
Thank you very much. The next question is from the line of Tushar Talwal, an individual investor. Please go ahead.
Hi, am I audible?
Yes, sir, you're audible now.
Thank you. Thank you for taking my question. Recently, the Directorate General of Trade Remedies has recommended imposition of anti-dumping duty on MEG. And we have been seeing a lot of advertisements in the newspapers from industry associations recommending that the Ministry of Finance not accept the proposal. While I will not go into whether it will be imposed or not, I wanted to understand two things, sir. What proportion of our raw materials by value is MEG? And what would be the impact of anti-dumping duty on our EBITDA in percentage and absolute terms if the ADD is imposed by the Ministry of Finance? Thank you.
The MEG as such is used around 30% in the product, 70% is PTA. These are the two major raw materials. And out of we are importing almost more than 50-55% of our needs. But if anti-dumping is put, even the local producer will raise the price. So the question of buying locally will not help much. But previously I had told that that from America you can buy. America doesn't have an anti-dumping duty, even if it is put by the Finance Ministry. And America is having a lot of surplus MEG, so which has already started flowing to India. And some of the suppliers have a plant in America also, which are supplying us from Middle East. So they have assured that they will be able to give us from America at very competitive prices. Of course, there will be some impact, and that impact could be on the yarn depending from 50 paisa to 1 rupee per kg. A kind of an impact can come if the anti-dumping is put.
And so how much does that translate into, EBITDA percentage? Is that possible to quantify?
It's around 0.5% to 1%.
Okay, sir. Thank you so much. That's all from my side.
Thank you very much. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you all the participants for sparing your time in joining us, and hope to talk to you all in the next Q3 of this financial year. Thank you, everyone.
Thank you very much. On behalf of Filatex India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.